Hello, good morning, and you're watching Buy Now Sell Now on ET Now with me, Vinny Motiwal, along with me, Cheryl D'Souza as well. And let's look at what the markets are doing, right? This morning, nothing exciting, but yes, Nifty is holding on to those 19,341 levels. Has been in that range since the get-go. Managed to stay in the green today. That's what we're looking out for in the Nifty, up 0.2% in trade as of now. Nifty Bank also holding on to some bit of a gain there. We saw a bit of a dip coming in, but yes, a recovery from there. And as of now, Nifty Bank too holding on to gains of around 0.1% in trade. Broader markets outperforming the benchmark indices again, and mid-cap space. That's the Nifty mid-cap up 0.4% in trade. Nifty small-cap up almost 0.6% in trade. What's doing well today is the Nifty Realty. That's holding on to strong gains among the top sectoral gainers. Metals too, as well as media. That's the space that is holding on to gain as well. What's not doing well is the Nifty PSU Bank. That's down and out in trade, down almost 0.6% in trade. In terms of individual movers that we're seeing coming in, look at the chemical names. They're doing quite well and holding on to good gains over there. Whether an India Pesticides holding on to gain, we have Tata Chemicals, Deepak Nitrite. All these are holding on to some bit of a gain over there as of now. Other than that, look at Gokul Das Exports. That's a stock that is locked in upper circuit as well. 20% uptick that we've seen coming in for Gokul Das Exports. And why is that so? Because obviously Gokul Das Exports is to buy Atraco Group, which is actually giving them more of an expansion in the export market and increasing their expansion plans as well. So yes, that is going to be interesting to watch out for. And also what happened is that my colleague Anisha actually managed to speak to Mr. Ganapathi, the managing director at Gokaldas Das Exports. So let's listen into the slice of the conversation in terms of what this acquisition means for the company. How will it expand their reach further? Let's listen in.
And the purpose for this was really to expand our business, expand our manufacturing footprint, and take advantage of the future growth in the market. With this asset, we feel that we'll get access to a very well-run organization. It has been in this business for over 3 decades, or about 3.5 decades. It's got excellent client base, which is very complementary to the customer base that we have. And it has got presence in duty-free, low-cost regions. So it has got multiple advantages that it brings to us, which is why we thought that it's such a complementary, asset from our standpoint, that it makes great sense to put these two together. So from that standpoint, we went ahead and said that, strategically it makes sense. We can cross-fertilize our customers between our company and that company. We can also, plan our growth more judiciously in low-cost regions. So it gives all of those benefits going forward.
And these benefits is something that has got the street excited as well. But let me take it one by one. You talked about how this, acquisition is going to give you the access to low-cost production as well. Does it mean that going forward, the margins will be accretive and this acquisition is going to be margin and EPS accretive from start itself?
So it is definitely margin EPS accretive. Otherwise, we wouldn't have done that. We've gotten, we've priced the acquisition right. We believe we've been fair in pricing it. And we believe that the possibility of revenue growth as well as margin growth in that asset exists over the next 2 to 3 years. Once we get control over the asset, we will start working on upgrading the plant machinery and expanding the business as well. So we feel that definitely it will help us in our not only top line growth but also margin growth.
Sure, you talked about the kind of upgradation and the capex that you'll be doing in the facilities of Atraco as well, and of course the acquisition cost itself. How are you going to fund it? Because I do understand that right now there's a healthy cash on books, but would you be taking on more debt as well? What will be the position like in the next 2 to 3 years?
So out of the 55 million that we will be paying for the asset, 15 million we will be funding it through our internal accruals, and we have more than enough internal accruals for this purpose. And 40 million we will be funding it through debt. And the debt lines are secured, so we will have we have all those approvals. We will be funding it with a $40 million US dollar debt for acquisition of this company.
Okay, and
our currently, we are net cash positive of about $50 million. So, even with this acquisition, it's not going to change, our debt equity, the impact on our debt equity ratio will be fairly minimal. So we feel very comfortable in doing this acquisition the way we have conceived it.
Okay, so comfortable on the balance sheet despite the acquisition. But talk to me about the timelines as well, Mr. Ganapathi. When will this actually get merged into the books? What could be the revenue potential in terms of the top line? Will it show in FY24 itself? Will it get percolated into FY25?
Yeah, if all goes well, we are trying to close this transaction by end of October. We will need a lot of regulatory approvals, from respective countries since it's a multi-country operations. So we're targeting end of October. So from a financial consolidation standpoint, the impact on this year will be only to the extent of about 4 to 5 months, more likely 5 months. But the whole FY25, we will see the full value of this acquisition coming through.
And what kind of revenue accretion will it do? Because if I have it right, in the past year, Atraco has clocked in a revenue of around 880 crores, etc. In terms of the growth profile as well, what's the run rate that you envisage for Gokaldas Exports on a consolidated basis?
So I think Atraco itself, last year they did 107 million. We believe that in FY25 we should see some growth over it. So we will work towards that. So anywhere between 900,000 crores coming from that asset, our own growth will be there. So we are hoping that the collective company can continue to grow on the consolidated base now. Long term, we would like to still maintain that 20% kind of growth if possible. We are working towards that. Market conditions should also improve to that effect, but we will do everything in our hands to do that.
Sure, and with this acquisition, what would your total manufacturing capacity be like? Because if I have it right, you were also looking at expanding your presence in Bangladesh as well. Talk to me about what's the capacity target you have in mind for the next 2 to 3 years.
So we manufacture about 36 million pieces, but they are high-end garments and very complex garments. Atraco manufactures about 40 million garments, not as complicated as what we do. So collectively we will be about 75, 80 million pieces kind of capacity that we have. I think with the capexes that we have, we will slowly grow further. Our intention, as I said, is to look at a capacity growth of about 10-15% every year, and we have recently brought on board a facility in Madhya Pradesh, which we will expand further, and a few other capexes that we have lined up in India. So all of that are work in progresses. The one in Bangladesh, I had also indicated earlier that we are temporarily suspended. It's not stopped or anything. We're just waiting for the right market conditions to bring that on board. We have the potential to time it right. So till recently we were seeing that the Western markets were not really that conducive for adding so much more capacity. So we were waiting. As soon as we start seeing growth, which we are already seeing now from the third quarter onwards, we will time it accordingly. With this asset now, we'll have to take all of that into consideration and time those moves appropriately.
All right, and that was the management of Gokaldas Exports talking about the recent acquisition and what it means for the company and the growth ahead. But on that note, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, we will start taking your queries, viewers, so don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. You can write to us on the number that will be flashing on your screen. Do remember to mention your name, the stock you're looking to invest in. If you've already invested, mention the buy price, the quantity, as well as time horizon. That way, our experts will be able to help you better. And talking about experts, today we have Kunal Bothra as well as Rajesh Agarwal joining us on the show. Very good morning to you, Kunal, as well as Rajesh. Thank you so much for joining us on Buy Now Sell Now. And today, let's start straight with the queries then, and the first one is coming from Jay Krishnan. He's writing to us from Kerala, and he's also said Onam greetings to the entire team at ET Now, and happy Onam to you and all of our viewers who are tuning in, who are celebrating Onam today. He wants 2 stocks as a suggestion for medium term, with an entry price as well: Polycab, Ambuja Cements, Emta Tech, and Castrol. Out of these 4, Kunal, which one do you think he should keep in his portfolio for the medium term? Also, if you could help him with an entry price for them.
So 2 things. One, first of all, happy Onam to everyone, all the viewers of ET Now, and secondly, belated happy birthday to you, Cheryl. So on the stocks which you mentioned, I think MTAR Tech is something which looks attractive at current levels from the list of candidates which you mentioned. Polycab, the only reason for not choosing the stock as of now is because it's run up exceedingly high. So that's the only concern for the stock price, because the indicators have gone to a very overbought territory for the stock price. I will wait out for a decent correction for Polycab to maybe come back towards say 4,400, 4,500 levels to go for a buy on the stock price. Yes, the charts are very attractive, but then buying the stock at a apt time could be a good strategy. I would probably recommend a couple of other names if you are okay with going out of the universe of stocks which you've identified. Tata Chemical is something which looks attractive from current levels of 1,060, 70 where it's trading right now. So would look out for a decent target on the upside, at least an 8 to 10% from a medium term time frame. And even Voltas from current levels of 840 looks very attractive.
Rajesh, the next query is from Bisakha from Kolkata. They're a long-term investor with a vision of around 2 years. Now, they're holding 30 shares of GSPL at a price of 233 rupees, and they're holding 30 shares of IGL at 375 rupees. What is your view on this one? Should they continue to hold this or maybe book out profits and buy something like a Rolex ring?
Good morning to everybody on the panel. Happy Onam to our viewers and the entire team of VT now. And yes, not to forget, a belated happy birthday to Cheryl too. As far as these two stocks are concerned, GSPL and IGL, I think both are long-term holds, because in the short term there might be some amount of correction because of the kind of run-up they have witnessed in the recent past. But for a longer-term horizon, GSPL, a good dividend yield, Gujarat-based company, doing very well. I think one should add this stock at every dips. And as far as IGL is concerned, the way the CNG thing is growing, I think this company has a very good future going ahead. Maybe a target of 540, 550 odd rupees in the next 1 year or so is quite possible. So I would suggest hold on IGL and add on dips for GSPL.
Rajesh as well as Kunal for those birthday wishes. But let me take the next query then. And this one is coming from Subbu. Oh, sorry, it's Subba Reddy. He's writing to us from Vizag. And Kunal, for you, 50 shares of Jindal Poly at a price of 500 and 50 shares of Global Spirits at a price of 960. For the short term, how are these counters looking like? Any change in the strategy for these stocks?
So both of them, they do look attractive. In Jindal Poly, of course, the stock has gone through a major time-wise correction, not just a price-wise correction over the last 1 year approximately, but even the short-term charts doesn't look attractive. So I'm not sure what trigger you are looking out for on the stock price to let the stock even come back into a breakout mode on the short-term basis. Same is the case with Global Spirits. I would in fact recommend maybe an alternative to Global Spirits from a similar space. You can look out for either United Spirits if you're looking at a formidable large cap name, and if you're okay with having some sort of a mid-cap name with a slight higher beta as compared to United Spirits, you can go for Soam Distilleries. I think both the charts and both the stocks look fairly attractive to me on the charts.
Moving on, and Rajesh, Pradeep of Kolkata wants to know in terms of, they're a long-term investor. They have 10 shares of Yasho Industries at around 1,736 rupees and 20 shares of LG Balakrishnan bought at around 703 rupees. What should they be doing with this? Should they continue to hold this or maybe exit and buy something like a Himadri specialty?
First, Yasho is fundamentally a strong company. One can hold for a longer term horizon, but the problem is the volumes are very low. So entry and exit is quite difficult task in that, but still it's a good buy. LG Balakrishnan is a buy at this point of time. The company is doing very well. They have Rolon brand, which has been doing very well, trading at a PE of around 10. I think this stock can give 20-30% return the next 1 year. As far as Himadri is concerned, I think it's run up quite a lot from almost 80 and 90 odd levels to 220, 225 odd levels in the recent past. I think one should wait for some correction to enter into this. There are a lot of stories going on. They, as per media reports, sometimes back I have heard that they were looking for acquiring Birla tires at the EV space. A lot of things are going up. The company is doing well, but still at this price, I would say wait for some correction to enter.
The next one that I have is coming in from Shashikant. He's writing to us from Kasaragod, Kerala. And this one is for you, Kunal. 65 shares of Idea Forge. I'm unsure if you track it because it's a recently listed counter. But he has those shares at a price of 1,302. And Tilak Nagar, at a price of around 190 shares. For a 1 year perspective, how do these counters look on the charts to you? Should he add some more to average the cost price?
Idea Forge, I would not recommend to average. Of course, the chart history is limited, but then whatever the recent charts have shown, I think in the last 1 month or 2 months or so, the stock has gone through a major correction. It seems like it should continue for some more time. So wait out for a breakout point. I think the nearest breakout point which I would be looking at on the charts would be closer to 1080, 1090 for Idea Forge. Tilak Nagar Industries, on the other hand, I would recommend to hold on to the stock price. I think it's going through a very strong phase of an uptrend. So it's one of the best phases of uptrend for Tilak Nagar Industries. In the last 6 months, the stock has moved from 120, 140 levels to 200 plus, where it's trading right now. Looks to be into a good or a fine fettle on the uptrend. It's trading above all those averages since the last 5-6 months. So that's also another comfort level for the stock price.
Okay, we have a query from Venkatrao from Visakhapatnam. Okay, he's addressed this to Kunal, but it's a long-term query. So Rajesh, I'm going to be taking it to you. The query is on India Cements. They have India Cements at a price of 247 rupees per share. What is it that they should be doing right now? Should they exit the stock or should they continue to hold? And if exit, then at what price should they be looking to exit it?
At this point of time, it's a hold. It's one of the largest capacity in South. They're doing very well. The numbers recently have been bad because of various reasons, but because the way infrastructure is trying to move up, I think cement is going to be a good play in the medium to long term. Even there have been some price hikes taken by cement companies. So I think it's a hold at this point of time. Somebody looking for exit to 70 to 75 would be a better level to try and book profits.
All right. This one is coming in from Sushila. He's writing from Bellary, Karnataka. And Sushila has Reliance Industries, Kunal, at a price of around 207 rupees per share. Does it make sense to continue to hold on to this particular counter, look to exit? Because if you see on your screen, spectacular rise is what Reliance is actually logging in today's trading session at least.
Well, yeah, good move for the stock price. 240 approximately is where the stock is trading. And my sense is that this breakout has been very strong for the stock. When we look at this on the longer term basis, the chart patterns are quite stable for Reliance Industries. So I think from 2022 second half is where the stock had started to show signs of recovery. 4-5 months back, March 2023, the stock formed a near-term bottom and it's moved up higher from 165 odd levels. So looks attractive. In fact, I would recommend a hold. If possible for this stock, you can keep a trailing stop loss. So it's since it's around 240 levels, you can keep maybe 225, 228 as a closing based trailing stop loss.
Kunal, I'm going to come to you again. We have this query coming in from Nandakumar from Mumbai. They want to know MapMy India. What is it looking like? Is it the right time to start picking up this stock?
I would think so. So again, limited history for charts for MapMy India. But then, this is what we typically look out for. For example, just to compare with Idea Forge, the stock has been going down. Even MapMy India had its own share of sharp correction from post-listing. The stock fell from, I think, 1800 or 1900 levels to a point where it came back towards 1000 mark. But from 1000, when the stock started to show signs of recovery, it managed to show signs of volumes rise, indicators moving up higher, consistent uptrend, higher highs and higher lows. All of that was seen for MapMy India. I would believe that that's a good sign of trend emerging for the stock. Would suggest a buy and use dips to add further.
All right, this next query that I have is coming in from Satya, and he wants to know a good pick from Kunal and and from Rajesh for this season. He is celebrating Onam, so he wants to know for the festive season, which is that gift that you will give him. I think Kunal already gave some of his stocks earlier, so it's your turn now, Rajesh.
See, if one has a time horizon of around 9 to 12 months, I would recommend IRCTC. One reason is that it's doing very well. The other reason is that the entire railway pack, which has run up quite a lot, this stock has underperformed and it's just waiting to move up. The fundamentals are very strong. All the 4 divisions, be it ticketing, rail, that's water, tourism, are doing very well. The numbers have been pretty good. FY23 numbers were the highest with 51% jump in bottom line. Debt-free company in some of the divisions, they are the market, they have the monopoly, I would say. So I think one can buy IRCTC with a 1 year time horizon and target of 800 rupees.
Kunal, the next query, and this one is from a senior citizen from Visakhapatnam, Satyaveni, and they want your They want your suggestion on Texmaco Rail as well as Ircon International. How is it looking at the current market price? Should they look to enter the stock right now?
Well, the indicators are extremely overheated for Texmaco Rail. So on the very short-term charts, this is the fifth straight month, or 4 out of 5 straight months of very strong uptrend for Texmaco. From 40 rupees, the stock has moved higher to 156, which is the high the stock had made in the morning, and now it's come back towards 140 level. So which means that it's trying to top out, or not top out, but then show signs of resistance at this higher level. I would suggest a book profit on Texmaco if you've already bought. If you're looking to buy, wait out for a sizable correction. At least a 20% correction is something which you should be looking out for in such kind of high beta names. So would be the case with the other railway stock.
Okay, this next query I have is coming in from Badri, writing to us from Bengaluru. Kunal, for you once more, 60 shares of Union Bank at a price of 88 rupees per share. He wants to know what's the outlook for this particular counter for a period of about next 3 to 6 months.
I would suggest a hold on Union Bank now. I think except for today's price and volume downtick, I would believe that the chart patterns were a lot more stable for Union Bank. I'm not sure whether this is an expiry based selling which is happening into the stock price or some sort of an event based. But the chart patterns on a medium term look very attractive. So I'd be bullish on it if you have a time horizon of 6 months at least.
Rajesh, we have Himanta from West Bengal who wants to know on Garden Reach Shipbuilding. They're holding 250 shares at a price of 807, as well as Vatek Vabag. They're holding 200 shares at 475. What is your view on this one for the long term? Should they continue to hold both these stocks?
Both are a very good stock. Vatek, it's one of the bigger player in water, and they're doing very well. The order book is very high. It's one of the very good companies in its own peer groups, I would say. One should buy at depths. As far as GRSE is concerned, that's Garden Reach Shipbuilding. It's doing very well. The order book is good. Defense plays, shipyard plays are doing very well, and team is good right now. And recently they have announced some tie-up with Tempo for moving into auto also. So I think all in all, both the companies are good. One should continue to hold.
It's coming from Yuvraj. He's writing to us from Bangalore. And Kunal, a tricky one, I believe. He has Tata Steel. It's closer to the current market price, but he's saying that the stock has not been seeing any momentum of late. So he wants to know whether it makes sense to switch out of Tata Steel and instead park their money in Deepak Nitrite and Lakshmi Organics. Do you think technically this is a sound move?
Tough one. I think all three of them are attractive. Tata Steel, I would believe, looks very attractive. So my sense is that the next sector which could move up significantly higher should be the metal and the commodity space. So many of the stocks are looking fairly attractive to me on the charts over there. I would recommend a hold on Tata Steel. And as compared to Lakshmi Organic, I would recommend that the stock would probably get into a breakout mode. So would suggest a buy. In fact, in the morning I have already suggested a buy on Lakshmi Organics with a target of 303. I would probably revise it to maybe 325, 330 from a short-term basis. And so would be the case with the other stock which you mentioned.
Okay, keeping an eye out on those levels for Lakshmi Organics. But on that note, viewers, we're going to sip into a very short break. Don't go anywhere. After the break, we'll be still taking your stock-related queries. Welcome back, and you're watching Buy Now, Sell Now on ET Now. Let's keep it going with all your stock-related queries. And Kunal, this one is coming your way. This one is from Archana. Firstly, she is saying she's a big fan of yours, and thank you so much for your advice for all this time. And the query she has is on HDFC Bank. Could you advise in terms of the target price for HDFC Bank in the next 6 months? What should one be looking at? And they've already bought 200 shares at 1,630 rupees.
Thank you so much for that. First of all, on HDFC Bank, on the second hand, I don't expect too much of a strong breakout in the very immediate term. So what's actually happened is that the stock has been a huge underperformer in this last 6 month, 9 month, even 1 year of market outperformance. The concern with HDFC Bank on the charts is that the stock has broken below its 200-day moving average, and it's not by a margin of 0.5% or so. It's now by a margin of almost 4 to 5% for the stock price, and still struggling to come back above the 200-day moving average. So my views on the HDFC Bank would probably change on the upside only once the stock breaks out this 200-day moving average. The stock generally struggles for at least a couple of months before it tries to come back or make a comeback above the long-term average. So I think it's better that you don't average further at current levels. Let the stock show signs of confirmation of a breakout. Let it come back about 200-day moving average. Then would be a better zone to average or add.
Okay, this one is coming from Mahalakshmi, and Mahalakshmi is writing to us from Hyderabad, and very interesting query. She has 100 shares of Sula Vineyards, which she purchased at 446 rupees per share. Rajesh, she's already making somewhere around 14% profit on this holding. Now she wants to know, should she add some more of Sula or look at other players in the similar field like Som Distilleries and Tilak Nagar for the long term? Do you think that she should diversify her portfolio in the current spirit space?
Out of the three names which the lady has said, I think Sula is the best bet. One should continue with a long-term horizon of maybe 12 to 18 months time horizon. I think 20 to 30% upside from the current market price is quite possible. The company has been doing very well. In wine segment, this is one of the leading companies and the only listed player, I would say, in wines. And not to forget the kind of other businesses like timeshare and all they have, their tourism packages. I think this company is going to give good returns. Although it's a recently listed company, but the prospects look very high. We are very bullish on this and would advise to add on depths.
Okay, Kunal, Reena Thomas from Kerala has a query on Alchem Labs. They are holding 50 shares of Alchem Labs. Can they, they've not given the buy price for this. So what is it that they should be expecting in terms of the up move over here? What is the target price that one should keep?
So, these pharma stocks and, these stocks over the last 6 months or say 1 year, 9 months odd have risen up exceedingly high. What you're seeing on Alchem Labs is just an indication that these stocks have come back towards the mean or are in the process of coming back towards the mean reversion. It's corrected from 4,200 to 3,700 mark. I believe at least another 200 points correction should be in the offing for the stock price, looking at the way the indicators are poised for the stock price. So I would probably expect that if you're looking to buy or average Alchem Labs, then 3,500 odd could be a zone where you may look to start averaging out.
All right, let me try and club queries I'm getting on Reliance Industries together. So, Kunal, I have one coming in from Ashwin from Mumbai. 10 shares of Reliance at an average price of 2,540 rupees per share. He is at a 5% loss. He wants to know, are you expecting a bounce back for Reliance or should he look to average at these levels? And the other one is coming from Subrata Mukherjee, who wants to know whether it's the right time to buy Reliance right now.
Well, I think I've been maintaining this time and again that the stock for Reliance is now more of an event-based stock or a special situation stock, because whenever you see stock in certain amount of news flow, that's where you tend to see a high momentum for the stock price. But other than that, Reliance is a stock which you should hold from a long-term view only in your portfolio. So don't look at it as a trading bet if you're looking at it as a 50-pointer, 100-pointer gain for Reliance Industries, because the stock may tend to disappoint time and again in that aspect. So I would suggest to hold on to Reliance Industries and what you can do is just tweak your time horizon from short term to long term. If you can't do that, then I think it's best to exit the stock.
Okay, Rajesh, we have Krishna Kumar from Bangalore who's holding 400 shares of HEG at 1,780 rupees per share. What would your advice be on this one? Should they continue to hold this or maybe exit this stock and move to something else?
See, graphite electrodes as a product is doing very well. Going forward with all those pollution-related issues, I think a lot of EAF, that's the electric arc furnace route of steel making, is going to take center stage, and companies like HEG or Graphite are going to do well. And they are the only two players in India, HEG being the largest capacity and Graphite being the largest. HEG being the largest single unit capacity and HEG being the largest capacity. So I think both of them needs a buy. It's a buy from our side. If one has a time horizon of 12 to 18 months, or maybe a 20-25% upside from these levels is quite possible.
All right, this one is coming from Puneet, and Puneet is actually blackmailing me into taking his query because he's telling me that please take my query. It will be a Rakhi gift from my side to him. I thought it should be the other way around, Puneet, isn't it? But let me take your query. Piramal Enterprises, he has this particular counter at a price of around 1,120 rupees per share, Kunal. Vedanta at the price of 240 rupees per share. Expected targets in the next 1 month.
What's the gift?
I have no idea. I'm not giving him
I
any
think
gift.
Kunal will ask for a next time instead of the answer. I think Kunal wants to ask you a
Kunal has
question
been
now.
asking me a lot of gifts of late. Nothing is happening. He's not yet given us the samosa and pizza party.
Oh yeah, where is that?
So I'll answer the two stocks which you mentioned, Piramal Enterprise as well as Vedanta. Vedanta, I'm not. I think I've time and again mentioned that I think it's not a stock which is worth holding in your portfolio. Given the kind of current chart structure for the stock, it's been an extremely high beta stock, consistent downtrend for the stock price, broken below its long-term averages much earlier, and still struggles at every time when the stock gets into a corrective phase. So I would suggest an exit on Vedanta. Piramal Enterprise is something which you should definitely look to hold on. So look at it this way, that the stock has broken out of a major correction, retraced more than 50% of the sell-off the stock had seen from 1700 to I think 600 odd mark for itself 5-6 months back. So it's in the process of recovery. There would be very volatile phases for Piramal Enterprise. We've seen this time and again for the stock price. Try and take advantage of those tough volatile times or corrections to average further.
Okay, Rajesh, the next query is from Prakash Nayak from Hyderabad. This one is called Nuvoco Vista, and they are holding around 351 shares at a price. 1,000 shares at a price of 351 rupees. What is your view on this one? Should they continue to hold this for a couple of years now?
Although we are very bullish on the cement pack as such, but this company has highly underperformed. They have not done anything. The numbers have been pretty bad. I don't find any reason to believe that one should hold this stock for a very long period of time, unless until something meaningful happens on the numbers side. It's better to switch to some good names like Birla Corp in the mid-cap space, or a Grasim or Ultratech in the large cap space.
The next query that I have is coming in from Poonam Anand, writing to us from Punjab. Kunal, for you. Sunflag Iron, I don't know if you tried this one, 150 shares at a price of 203. And Nykaa, 150 shares at a price of 135 rupees per share. What should she do with these holdings?
See, I'll start off with Nykaa. I would believe that if you've bought at current levels and the stock is just thereabouts, you can continue to hold on. It's not that the chart structures have weakened significantly. There was a very recent attempt for the stock to break past about 200-day moving average. It somehow struggled to cross over those levels convincingly, which means that maybe the stock would lie low for maybe another couple of months before it tries to make a comeback again or retest those levels. I would suggest an add on Nykaa only once you see that confirmation of a 200-day moving average breakout, say if it happens in the next couple of months or in the next 1 or 2 quarters. For Sunflag Iron, I think it's a brilliant chart. At 200 to 103, the stock has also come back to its 50-day moving average, which means the correction of 15% or 10% has already happened for the stock from the recent highs. Could be a very good zone where you will look to start buying.
Okay, Rajesh, the next one is from Vinod from Gurgaon, and they're a long-term investor. They have 1,500 shares of Greaves Cotton at a price of 149 rupees, as well as they're holding RBL Bank at a price of 180 rupees. What should they do right now? Should they look to add some more of both these stocks?
Yeah, adding at RBL Bank is advisable. The numbers have started showing some amount of turnaround. They're doing very well. The valuations are cheap. That's because of all the negative news which were there in the past. I think at this price, one can add RBL Bank. But as far as Greaves Cotton is concerned, I think some amount of correction to be there. So wait for some correction around 120, 125 levels would be a better levels to add.
This next one is coming in from Vidya from Chennai, who is a short-term trader. Kunal, fresh entry. He's looking at a fresh entry into Coromandel International as well as delivery. Do you think it's the right time to accumulate these counters?
Yeah, could be a good time to accumulate the stocks both from a short term as well as from a delivery perspective. I think the stock has confirmed a new high or is just about to confirm a new high on the charts on the short term basis, and that could probably result into a decent breakout. The last few times whenever the stock has given such a kind of a breakout, we've seen on average a 5 to 7% up move say in the next 1 or 2 weeks for Coromandel. So this could probably be a good attempt for the stock price even going forward. So it could be a good time where you can look to buy.
Rajesh, we have V. Mathur from Delhi, who's a long-term investor, is holding Tech Mahindra 353 shares at a price of 1,353 rupees. What should they be expecting for Tech Mahindra now? Obviously they're making a loss right now, so should they continue to hold this?
Yes, one can continue to hold. There has been a lot of negative news flows in the IT pack as such, and almost all the companies have seen deep correction. So I think companies like Infosys, Tech Mahindra, TCS are good long-term bets and should not be taken as a short-term price correction to be worried about. I think one can continue to hold Tech Mahindra with a target of 1350, 1400 odd rupees in the next 2-3 quarters.
Okay, this one is coming from Dr. Vadiwala from Pune, and Lux Industries holding at a price of around 1,540 rupees per share. Kunal, for the last 1 year, wants to know whether it should hold or exit.
Again, I would suggest an exit on the stock. Disappointing charts on the long-term basis. What the concern for Lux Industries on the charts is this recent breakout for the stock about 200-day moving average, and then immediate reversal on the stock in just a matter of, I think, 1 or 2 weeks for the stock price. That, I think, could probably disappoint the traders from a short to medium term angle. So I would recommend an exit on the stock price given the way the chart patterns have behaved over the last few weeks and last few months.
Rajesh, we have Dinesh who has a couple of queries. One is on IEX. They're holding 1,000 shares at an average price of 145 rupees. And the second stock they're holding is West Coast Paper at 150 shares at a price of 650 rupees. They're ready to hold it for a long term of 2 to 3 years. What's your view on both these stocks?
See, IEX, has been a negative news flow, and that's why it has seen a good amount of correction. The valuation at this point of time discounts every news, I think. So one can continue to hold. West Coast, one can add. They have good capacity. They have holdings in Andhra Paper, which again adds to their capacity because it's a subsidiary to that. The paper demand is going up. Prices are stable. Valuations, it's trading at around a 5, 6p, 7p. So going forward with their own plantation, I think this company can give very good returns. One can buy West Coast Paper.
Flashes on the bottom of your screen coming in from Maruti Suzuki AGM. We have RC Bhargava who are addressing the shareholders in that particular AGM, and some key commentary. One is that they're planning 45,000 crore rupees investment to double capacity, and they're expecting the turnover to double after the output has reached 4 million cars. Also, they're saying that the board will be discussing the shareholders' demand of a stock split. Apart from that, what they're saying is that yes, they are agreeing that Maruti Suzuki is behind some companies in EV launches, but that doesn't mean that they are late. Also, they're saying that being late does not damage their ability to acquire the market share in EVs. And also, they've accepted the fact that the market share for small cars is definitely dropping, but they are saying that they are adjusting to the fact that the small car market is going down, and they are continuing to build in new infra as well going ahead. So that's the commentary coming in from Maruti Suzuki AGM. Of late, we've had a lot of companies coming out with their AGMs. You have ONGC also that is having their AGM today, and yesterday you had Reliance Industries AGM. But yes, watch out for those commentaries. But on that note, actually, we slip into a break on this edition of Buy Now, Sell Now. When we come back, we will continue taking your queries, viewers, so don't go anywhere. Alright, welcome back. You're watching Buy Now, Sell Now, and let's continue taking your query. This one is come from Jitendra. He's writing to us from Pune, and this one is for you, Rajesh. He wants to know whether he should invest or invest further into Polyplex for the longer term. He's holding 62 shares at an average price of 1,519 rupees per share. He's been buying from the levels of 2,200, and also he averaged at around 1,100. So he wants to know what should he do. He has been investing as an SIP over the last 12 months. So do you think that strategy works? Invest in this company as an SIP, or is there any other strategy that you have for Polyplex?
See, the company had been doing very well in the recent past. Very recently, the numbers have been started deteriorating because of various reasons of polyfilms, demand going down, crude prices going up, and all those things. This company has a track record of giving dividends every quarter, I would say, and the valuations at 3 to 4 PE are quite cheap. I think going forward, this company can do well once the industry shows a turnaround. But in the current scenario, I don't find any reason to believe that in the next 1 or 2 quarters, there would be some turnaround. So for longer term horizon, you can continue to hold whatever you are holding. But adding at this point of time would not be advised unless and until some numbers show some improvement.
Okay. Rajesh, I'm going to come to you. This query is from Subramaniam Pichai and from Chennai. They're holding 100 shares of GNFC at a price of 705 rupees. What is the long-term prospect for this stock? Should they continue to hold this, or maybe book out and look at something else now?
very good company, I would say. Fertilizer, chemicals, all doing very well. TDI, which is one of their main product, has seen good demand, and a lot of producers across the world has closed down their capacities. So GNFC is one of the biggest beneficiary, I would say. Valuations are very cheap, 4-5 times P. They are giving good dividends. One should not only continue to hold, one can even add.
All-time favorite IDFC First Bank. That's the query that I have. Abhishek is writing to us from Hyderabad. He wants to know about what sort of target should he have for IDFC First Bank. He's already purchased the stock at a price of 84 rupees per share.
So I think target depends on the time frame which you are okay to hold on to the stock price. If you are in for say the next 3-6 months odd, I would keep 108, 110 as a target for IDFC First Bank, especially given the kind of momentum the stock has shown in the last 2 quarters. And if you're in from long-term play, which means by that I mean a time horizon of at least 2 years, then the targets could be significantly higher from current levels and from those previous target levels.
Okay. Rajesh, the next one is on Tarson products. We have a query from Raja who wants to know how is Tarson products looking like? Is it a good time to buy this one for the medium to long term?
See, the company is good. They have good government orders. They're doing into medical devices, going for some capex also. But buying at this point would not be advised. I think 450, 400, 450 levels would be some better levels to enter. Wait for some amount of more correction. It has gone into a correction phase. Some more correction is expected. So if by chance you get around 450 odd levels, then you can add.
All right, this one is coming in from MSV Raghavan, writing to us from Chennai. Kunal, this one is for you. MMTC, 1,000 shares. He's asking, can he look to buy this particular counter right now and hold it for the next 6 to 12 months? Do you think it's an advisable strategy to actually look at this counter?
Well, you can consider buying the stock, but I'm assuming or sensing that this could be a part of your entire portfolio construct and not just an individual trading bet. If that's the case, that the stock is part of your entire portfolio, and by that I mean having a very small portion of the entire portfolio, then you can go for it.
On that note, let's get started with the rapid fire. And Kunal, the first one is for you, and this one is from Subramaniam for Chennai. They're holding Himadri Specialty Chemicals, 60 shares at 57 rupees. Should they look to sell some part of it?
Hold on to it.
Rajesh, this one is coming in from Mahindra from Bangalore. Sterling and Wilson Solar, 250 shares at 369 rupees per share. Stay put with this for the longer term. He's saying he can.
It's a hold.
Kunal, Yash from Mumbai wants to know on Black Box, they have 100 shares. Should they continue to hold or sell?
Would recommend a hold on the stock.
RCF is the next stock, Kunal. Naresh has 1,500 shares, average price of 112 rupees per share. Near-term target for this one?
135.
Rajesh, we have Reddy from Hyderabad who's holding Tata Steel at 114 rupees. Should they continue to hold, sell, or maybe sell and buy JSW Steel?
No, it's a buy from our side.
Alright, Sudha is making 25% profit in Titagarh Rail. Kunal, what should she do? Book out and re-enter at what price?
Yes, it could be a good strategy. You can buy or look to rebuy closer to 700.
Rajesh, Anand Nayak from Bangalore is holding 50 shares of Gabriel at 146 rupees. Should they continue to hold, hold, sell, or maybe add some more?
Add it around 280 levels. Continue to hold.
NetWeb is a counter. Kunal, Rajan wants to know, has it fallen enough that he should look to buy now at current levels?
Would not recommend a buy.
Kunal, 500 shares of RBL Bank at 228 rupees is what Anu is holding. Short-term view on this?
Bullish on the stock. Look to average closer to 214.
Okay, Thomas George, long-term investor, has Garden Reach 300 shares of this one, Rajesh, at a price of 830 rupees per share. What should he do? Buy some more, sell, or hold?
Hold.
Kunal, the viewers, Indu is holding Grindwell Norton at 1,750 rupees per share. What should they do with this? Continue to hold it?
Yes, continue to hold on.
Okay, this one is coming in from Rajesh Pai from Dubai. Kunal, Kirloskar Engines, I don't know if you track this one, 300 shares at 411 rupees per share. What should he do with this one?
Would recommend a hold.
Rajesh, we have Nitin from Chennai who's holding 100 shares of Shanti Gears at 400 rupees. What should they do? Hold or exit?
It's a buy from the side. One can even add.
All right, and with that we come to the end of the rapid fire. Thank you so much, Kunal, as well as Rajesh, for joining us on the show, taking our viewer queries and resolving them as well. And with that, viewers, we're totally out of time on this edition of Buy Now, Sell Now. It's a goodbye from Vinny, myself, and the team that put the show together. But stay tuned, Markets at Noon coming up next.